Greetings. Welcome to my weekend market recap, 19th March 2023. I'm Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle superiorprofit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems for my trading. All the Q components run on the Metastock platform and the technical analysis component runs on TradeStation as well. That was the last slide. Let's continue with the live systems. This week will be a shorter video because the market is not ready yet for buying. Though I bought a few stocks, I think yesterday or day before yesterday, I look at them. But still the market as a whole is not ready yet for buying, and I would not like to look at many stocks from the buying side. On the shorting side, it is too late to short, so I'm not going to look for shorting candidates also. Let's look at the market and see if that is a valid conclusion. First, looking at global markets, all ordinaries came down from the multiple direction lines, diverging direction lines, also called fanning out, and then went below the lower boundary. It was oversold, and on Friday the oversold condition went away, indicated by the bull release. Therefore, if someone had shorted looking at the fan out and the magenta flow candle that gave a possible flow trend following short setup, they could tighten stop now for any short trade taken on this day. Because I'm not going to look at many stocks today, let's look at the specifics of some of the techniques. I'm saying that on this day there was a flow short setup. I can see the weekly was also magenta, so the flow short setup met all the checklist conditions. However, if you looked at the short candidate at the close of the day, that would be too late to take the short. So at the close of the day, it was already below lower boundary. But if you use real-time systems, including real-time data on Metastock, then you could identify the short early in the day, and that would allow you and me to take a low-risk short entry. You could book partial profit by the close of the day itself, and the remaining position that you may be still holding, you may tighten stop looking at the bull release and also the very bullish shape candle on Friday. And I noticed that it happened with unusually high volume. That is how Q systems and techniques allows you to take the trade at the optimal point, book partial profit quickly, and also helps you manage the trade, the remaining position. Now it is too late to short and too early to buy. There is no long trade setup using the unambiguous checklists. Next, Japan's Topix Index. Topix had what I call a wild move. From above the upper boundary, it went straight down below the lower boundary. From above upper boundary, straight down to below the lower boundary. That's a wild move. Now on Thursday, it displayed a bullish indecision at the low, at which point price came very close to the weekly trend line support and also the daily trend line support, closed with a bullish shape candle. And next day on Friday, it again had a bullish shape candle and a bull release. As of Friday's close, I would not like to buy into topics or the constituent stocks, but looking at the bounce up from the trend lines, the support lines on Thursday, you could look at buying stocks, constituent stocks of topics that are fundamentally strong and in relatively strong industries at the close of Thursday. Now I will neither buy nor short. Next, China's CSI 300 index. In a way, sometimes it is good not to have too many stocks to trade. Then I may explain the techniques in a bit more detail, like today. CSI 300 index, in the weekly, it is bearish in color, but it has a doji candle. Seems like a perfect doji candle. That is indecisive. In daily, it came down to the lower boundary, but at the lower boundary, it is displaying a series of bull release signals and also bullish indecisions. If I had taken a short trade on this day, which would have given us a flow trend following short setup, then we could book partial profit along the way when it hit the lower boundary, and we could tighten stop on the remaining position, seeing the weekly doji, seeing the bullish indecision, and seeing also the bull release in recent days. Now it is not at a point where I am willing to buy and it is too close to the lower boundary for me to short. I like to short in the value area, which is the area between the two boundary lines, or I like to short using the diverging direction lines as happened at this point. CSI 300 indecisive. Next, India's Nifty 50. Again, same conclusion. The weekly is bearish in color, but it has a lower tail. In the daily, we have 2 days in a row, Thursday and Friday, with bullish indecision. Price is below lower boundary, or you may say at the lower boundary as of Friday's close. Also, it was oversold. On Friday, the oversold condition went away. We have a bull release. Friday also has unusually high volume. If for some reason you shorted earlier, for example at this point when it gave a trend following flow short setup, you could book partial profit along the way, and if you are still holding partial position, you may tighten the stop looking at the series of bullish indecisions and the bull release. Remember what I explained in the master classes. Videos are available open to the public through the learning page on my website superiorprofit.co. What I mentioned is that if we have one bullish indecision like here, we take note. If we have a series of them or a cluster of them together, we take extra note of that. How to take extra note of that is, as I mentioned, if we are still holding a short position, to tighten stop and get ready, in fact, to buy some stocks. And if I may look into some stocks in the Indian market, let's look at some healthcare stocks. Healthcare sector was down for a long time, and now again I am diverging a bit from regular market recap to techniques. That is a very lucrative technique. Watch out for a sector that was weak for a long time for some signs of strength. If you see that a sector, or even better, one of the industries in that sector, so one of the industries in the healthcare sector in that case for India market, and if you happen to see multiple stocks in that sector and or industry are starting to move up, then you have more confidence in buying those stocks. Furthermore, you may only buy stocks that are fundamentally strong. So I look at one such stock. I don't know how it closed on Friday. Again, now discussing the technique, doesn't matter which country stock I'm looking at. There is a stock, Abbott. I think Abbott is an international healthcare stock. They are also listed in India with the ticker ABOT.NS, the definitive symbol that is. Let's get the fundamental scorecard using Q Vital for Abbott. Let's go back to India's Nifty 50 for a moment. We saw the week was down for Nifty 50, the major market index in India, and we saw that daily on Thursday and Friday, both the days are showing bullish indecision. So we are about to be ready to buy some stocks. One way to get ready is to look for fundamentally strong stocks like Abbott. It is not showing good valuation, which is fine. In Q systems, we are allowed to buy based on either valuation or high growth. This has high earnings growth, respectable earnings growth in the last quarter, 23.9%. And Indian market is not USA market, so we don't expect the kind of growth that is quite prevalent in the USA market in other global markets, including India. So 23.9% is a respectable growth for a pharmaceuticals company listed in India. What caught my attention also was that funds are accumulating. And we see that 47% of stocks went up in this industry. Again, in the Indian market, Abbott may be listed globally also in other exchanges, but this is Abbott India. And this stock was up over 1 day period, 2 day period, 5 day period, as well as 10 day period. It has robust earnings quality, makes money. Now, when you see that a stock is up over 10 days, 5 days, 2 day, as well as 1 day, and then you look at that stock's market index and you see over 5 days, 10 days, both the market is actually down, then you know the stock is outperforming the market. It has good fundamentals. Let's look at the stocks charts now. The advantage of Q systems is that It allows to look at any stock in any exchange in the whole world, including USA, of course, but other global markets, and see a beautiful chart pattern in about India. A series of trendline supports in daily and a trendline support very close to current price in weekly, further trendline supports below the current price. It was strongly going up in this area. What exactly do I mean strongly going up? From this candle to this candle, all the way we had only bullish backdrop color. That's what is meant by a strong weekly move. Series of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks of bullish backdrop. And you notice some of the weeks had down move, but that is fine. That is a kind of noise that is available, that is visible in every stock. It may be down in some of the weeks, but the backdrop color told us to remain bullish. Will I buy along the way? No, I buy at swing low using proper Q trade setup. But once I entered it, the backdrop told us to hold on to the stock, maybe after booking partial profit, at least in my personal trading, using trailing stop for the remaining position. Then it turned yellow, cyan again, then yellow. Only here it turned magenta. So along the way, somewhere here you would get stopped out of the remaining position. Then price decline, made a higher low in the weekly. What happened before that? It displayed a bullish indecision followed by a bull release, and this week is the first week after this decline. Again, that decline created a higher low. After that decline, this is the first week that closed with a bullish backdrop and bullish color with a long lower tail, and very significantly also it created a bullish reversal. All that happened right at the trend line support. That was a point to buy the stock. Would I buy using weekly? No. Using daily, on Thursday, I see a bullish flow and a flow trend following long setup. Remember how I looked at multiple market indexes giving flow short setup. And now I am using the same flow setup but in the reverse bullish direction in a fundamentally strong stock about India accumulated by funds, buying the stock right at trendline supports in both daily weekly using a proper trade setup as of Thursday's close. I took the trade on Thursday and I am holding on to the stock as of Friday's close with a small profit. My stop loss will be below the trend line support in daily. The exact same technique you may apply in the USA market or any other market for that matter. Because I have some extra time today, I'm discussing a bit more on the techniques and taking real life examples. I have a long position in Abbott. Now this pattern is very useful where we have trend line support. These supports work extremely well. If you are using Q systems, you know that. Are there other stocks in Indian market that are at both weekly, daily trendline support? Probably there is. I don't remember, but let's look at another healthcare stock, Aurobindo Pharma. Rescale the axis. No, this is not the one. No, Aurobindo Pharma does not have. So I happen to remember another stock in healthcare sector India. I was wondering if it also has trend line supports in weekly. It doesn't. So that also serves a useful purpose. When we look at these two stocks, both in the same sector, in the same country, Aurobindo Pharma and Abbott India, we instantly know which one to buy. As a low risk, higher probability candidate, in this case, that would be Abbott India, not Aurobindo Pharma. Not as of Friday's close, or not even as of Thursday's close, relatively speaking. Okay, that was a diversion into how I took a long trade in India market while the Nifty itself is still down for the week. And in fact, I did buy at least one stock in the USA market during Thursday, Friday using a similar approach. A stock that was going up while the market was not so bullish yet. I look at the stock later. I think I bought it on Thursday. We'll have a look at the chart later. Let's look at the last global market that we always look at, that is FTSE index, UK market. Once again, on this day as well as on this day, we had possible flow trend following short setup. That would be the optimal shorting point. Stop would be just above the recent high in both cases. Stop was not never approached. Right on this day, you would book partial profit. More than risk distance was comfortably covered and you could hold on to the remaining position till Friday's close. Now you see one difference between FTSE index and the few other global indexes we saw. Several other global indexes had some kind of bullish signal on Thursday and or Friday. What kind of bullish signals? Either bullish indecision or bull release or bullish shape candle. UK market is not displaying that. As of Friday's close, we have a bearish shape, bearish color candle, and the weekly candle is nowhere near a doji, very long bearish shape and bearish color candle. Isn't it beautiful that once again the bearish headwind caught the very top of FTSE index? In fact, it did the same at this point also. The people who use Q systems never ignore the bearish headwind. The signal itself is not a short setup, but there is a setup using the signal. If all the unambiguous checklist conditions are met, then we take a short trade using bearish headwind, and we would take a long trade using bullish headwind trade setup. This is looking the most bearish among all the global markets we saw. What about the USA market? Let's switch from Q Global on Metastock to Q Elite on TradeStation for that. Now it's again time to look back. Look back and see the power of the Q systems and how I could, and therefore you could, anticipate a move before it happened, get ready and probably make some profit from that. In the last market recap, I mentioned two of the market ETFs as having nearby trendline supports. SPY was one of them. Last week the market closed here when I had the market recap. And this is exactly what I mentioned. If price could go below the trendline support and reverse back up, thereby creating a false downside breakout, that would be the precise time to look for some buying candidates. And if you did that, you could trade the market and or stocks in a very efficient way. What do I mean by efficient in this case? The stop loss would be very narrow. You could also trade on the E-mini S&P 500 futures using the same approach. If you are okay to hold the futures or the ETF of course it's easier to hold overnight. In either case, stop would be below this day's close, this day's low. The stop was never hit as of Friday's close. So you could trade it using futures, you could trade it using ETFs, but what is the preferred instrument in this case? As I mentioned earlier, if I'm taking a reversal trade, I don't want to use ETFs or futures so much. I prefer to use options verticals, and in this case preferably short call verticals where the time decay would be in my favor, even volatility would be in my favor and delta would be in my favor, and I would not get stopped out because verticals are defined risk trades. If I created a short call vertical right at the point price went back up above the trend line support on this day, I have a significant profit by Friday's close, and I had a much larger profit as of Thursday's close, much more than the risk distance. This would be the risk distance. Much more than the risk distance was covered by Thursday's high. So using Q approach, I would book at least partial profit. This is another live example where I could and you could anticipate a move before it happened, get ready and take a low risk bullish trade when the market was bearish, the newses were bearish, most people were bearish, but I could be ready, you could be ready and take a low risk entry that worked out. Now there was another ETF which had the possibility of the false downside breakout, and I mentioned that also explicitly in the last market recap. That was IWM. I conducted the last market recap on this day, and I noticed that IWM also had a trend line support nearby, in this case in both daily and weekly, and I mentioned once again that if price went below the trend line support and went back above that, that would create a false downside breakout. It did create a false downside breakout. However, if you compare this candle with SPY's candle, SPY's candle was much more bullish. Both are market ETFs, and again, I have explained before, if I am trading market futures or market ETFs, and I am buying, I like to buy or take bullish position in the stronger one, not the weaker one. So yes, IWM also, as I anticipated it did create a false downside breakout, but SPY had a more bullish chart setup and I would have taken a bullish trade in SPY, not IWM. If we look at weekly, IWM is clearly more bearish than SPY, because the weekly closed below the trend line support. Now, interestingly, quite interestingly, in fact, we had a bullish headwind at this point in IWM that led to a sharp rally up immediately after the bullish headwind. And now price has come back to the same level, the watermark level that was created by the earlier bullish headwind. And in all these zigzag up down very volatile moves in IWM over last 5 days, let me clear the drawings again, very volatile moves in IWM for all the 5 days. Gap down open, very long candle, indecisive Monday. Gap up, huge gap up actually, and then very indecisive candle once again, price closing below the open but far above the previous day's close. Wednesday, huge gap down, but closing with a bullish shape candle, closing back above the trend line support. Thursday, not gap down but down open and sharp move up, and interestingly we have a bullish headwind and a bull release signal. Friday, not gap down but down open and sharp move down throughout the day. This is the most volatile of the market ETFs in this week, and if this is the most volatile, that also means it is the most unpredictable. Why would I or you trade in this market ETF? The direction is not at all clear. I would prefer to trade the more predictable, not certain, but relatively more predictable market ETFs. That would be another reason to trade the other futures, S&P 500 futures or Nasdaq futures or Dow Jones futures, than trading the Russell 2000 futures in this week. And the same is true for ETFs or options on ETFs. Coming back to the bullish headwinds at the same level, I will be happy to see price closing above both the daily and weekly trendline supports. That will give me reason to consider buying small cap stocks. Some of that is coming from the bullish headwinds coming from the same level, and the watermark level is holding. Now again, am I going to really end up buying IWM? I'll have to see if IWM is the strongest of the market ETFs, because these are market ETFs. If IWM is not the strongest one, I will why will I buy the weaker one? I'll buy the stronger one like SPY right now, relatively speaking. But if on Monday it creates a false downside breakout again and it turns out to be the strongest one, how will I know that it is the stronger one? This relative performance line that is now sharply tilting down from here, even from here, that should tilt up. Then I will be very happy to start looking into small cap stocks. Not yet, but that is how I'm anticipating a move and getting ready. That's how I traded S&P 500, mostly using futures last week. What about DIA? DIA is also very erratic this week, not an instrument that I would like to trade. Weekly is bearish, but not as bearish as IWM. More bearish than SPY, but less bearish than IWM. Daily is too volatile to trade this week. And QQQ, this is the strongest one. This is the one where weekly is very bullish with bullish flow and a bullish reversal. We had a bullish reversal 2 weeks ago. So clearly people are stepping in to buy large cap tech stocks. This is the most bullish of all the market ETFs, and see the relative performance sharply going up in total contradiction to small cap IWM stocks. Now I tweeted a chart of QQQ on Thursday. Let's look at the tweet. On my Twitter handle, Superior Profit, on Thursday, March 16, midday, New York time, 12:50 p.m. This is what I shared. Weekly was bullish in color and shape. Weekly already as of Thursday itself created a reversal candle, and the daily was beautifully breaking out of a trendline resistance after creating what you may call a W pattern, and after creating a false downside breakout at this point. And remember, this is exactly the point where SPY was also creating false downside breakout, and now we have a confirmed upside breakout above trendline resistance. Look back again. This session is probably more of techniques and how to use the Q setups and signals. Here we had a series of bullish indecisions. Again, one is important, cluster of them coming together, we put extra weightage on. That actually created the bottom. Double bottom, false downside breakout at this point, which is even more powerful bullish signal. We might wait for the trend line resistance to be broken. That was happening on Thursday, as I tweeted here. Or you could take a precision entry right when it was completing the false downside breakout at the watermark support. You would do that using the precision entry fine tune chart. So in any case, on Thursday I shared this chart of QQQ, and I was looking to buy some technology stocks that were also going up, and I found this stock and I took a long position in that. I used options vertical, bullish options vertical. The stock is, in India it was Abbott, and the American stock also happens to start with A, that is Adobe, ADBE. Let's look at its fundamentals first. Retrieving PR data from Refinitiv, but we can already see the scorecard, great fundamentals. And just now remember what I mentioned, American market is very deep and broad, the deepest and broadest in the world. So here we have many stronger fundamental stocks in terms of Q scorecard than in other global markets like India. So Abbott India was a strong fundamental stock. We could decide that from Q scorecard, but Adobe is better. Of course, they are in different markets, different industries. Adobe is application software stock. Look at the scorecard. Great valuation, high earnings quality. Now, let's compare. I know they are in different countries, different industries, but this is about technique and how to read the scorecard. For Abbott, the valuation was not so strong. Here, valuation is very bullish. For Abbott, the earnings growth was higher. Here, the earnings growth is lower, but it has steady earnings growth across 3 years as well as last 3 quarters. It also has steady revenue growth across 3 years, 3 quarters. That's very nice to have. What is similar between the two stocks is that both are being accumulated by funds. In case of Adobe, insiders are buying it, analysts are also bullish if you want to put weightage on that. Now, like Abbott, Adobe is also up over 1 day, 2 day, 5 day, 10 day. Remember, Abbott in India was steadily going up while Nifty was coming down, and Abbott in India and Adobe in USA was steadily going up when the USA market was not so strong. So this is what I found on Thursday, and let's look at the chart. ADBE. Adobe was going up from trendline support, created a bullish reversal this week. Remember, QQQ created a weekly bullish reversal as of Thursday itself. And I think Adobe also did the same. Anyway, as of Friday's close, we can see a bullish reversal. As of Thursday, we could see that price was going up from weekly trendline support with a bullish backdrop and bullish shape. relative performance was sharply tilting up. In the daily on Thursday, we had a bullish flow and in fact a trend following flow long trade setup. Notice another thing, when the market was so weak overall, on Thursday, Adobe was being heavily bought. Remember, we saw funds are accumulating, even insiders are buying. That was in terms of Q fundamental scorecard. And here I see on Thursday when it gave a flow long setup, when price was bouncing up from both weekly and daily trend line supports, we also had this telltale signal of heavy buying in a weak market of big move up 3. And if I switch to the daily chart template that shows the historical trend lines, we see that on Thursday we did have not only a flow trend following long setup but also a breakout long setup. Not only that, we see that it gapped up well above previous day's high. So we also had a gap long trade setup. So Thursday we had 3 buy signals in the same stock, fundamentally strong stock, that Adobe gave breakout long setup, flow long setup and gap long setup, and that was the stock I bought on Thursday. That is how, once again, when many people are still bearish, of course some people already know the market is oversold. I can see that from Q systems, they can also see that from Q systems, but I could actually act on the fact that we had false downside breakouts in multiple market ETFs in the USA market. I could look for fundamentally strong stocks that were outperforming the market and actually bought them at a low risk entry point using 3 different setups on the same day, and I used verticals to manage my risk. It was a defined risk trade. I am still holding the trade. I think it had at some point on Friday, at least it had about 19% profit on the options vertical trade. Might have closed around that 16 to 90% of profit. I'm holding on to the trade. But the market is not ready to be bought yet. If the market goes up next week, as of now, we see technology, large scale technology stocks will be the place to buy. Now let's refine that view a bit more using the Q Global market breadth total view. Why am I getting ready to buy? We had several bingo, that is, throw out the baby along with bathwater. In other words, sell everything, even those of value. On Thursday, we had a mildly bullish day, 1 accumulation count, not enough. In fact, we need at least 2 accumulation count to turn it green. Yellow is an alert, but not a bullish enough day in terms of overall market breadth. Of course, we saw QQQ was giving clear buy signal, but not the whole market. That's why, and that's how you could look at the market from different angles, choose the strongest area, QQQ in this case, and focus on buying large cap tech stocks on Thursday. Now on Friday, we have a distribution count of 2. However, we have an inside bar. Thursday's candle is engulfing Friday's candle. So Friday we had an inside candle. It is stopping right at the 200-day moving average, 50-day moving average, not very far away. If it can go above both of them, that will be bullish. The market was oversold and is oversold from some angles, or near oversold. At this point, the 3-month new high low hit the oversold point. After that, it recovered a bit. That was the time you could start to look for buying some stocks. In terms of percentage of stocks above 50-day moving average, the yellow line hit the oversold level at this point, then it recovered a bit. In fact, it is showing higher high, higher low. If it goes up now, if it goes up now next week, that will be a further signal to buy. Now I see one interesting pattern in the growth versus value and small cap versus large cap. Growth versus value is sharply tilting up. So growth is very much in favor now, and small cap versus large cap sharply going down. So small cap is not favored at all. That is in sync with what we saw in terms of external view, that is market ETFs. QQQ was strongest, that is large cap tech stocks, and many of the tech stocks are growth stocks also. So growth stock is doing better, small cap is doing worse. Now interestingly, small cap is doing very poorly, and I looked at IWM stock. I am already starting to think of buying IWM, the small cap stocks, if IWM starts to go up next week and this line small cap versus large cap tilts up. That will give the optimal signal, that's the lowest risk signal to start buying small cap stocks again. So again, I am anticipating a move, getting ready, but not buying yet. I am using the current signals to buy, like I bought Adobe on Thursday. Still near oversold territory, and I'll be more happy if the market goes up from here. That will make the decision to buy fundamentally strong stocks easier. If the market goes down from here, it will not be so easy to keep shorting, because the lowest risk shorting opportunities may not be available so easily at this point. That's about charts. Let's look at the sector industry stock breadth using Q Edge. Sector industry stock breadth over 1 month to 1 day, still very much bearish. It's difficult to short with such a bearish picture. I'll be happier to see Monday turning green. On Monday this will change to real time. If it turns green, it will be easier to find low risk buying opportunities. In terms of bucket analysis, remember the percentage of stocks in the lowest bucket, it in fact hit 50%. I remember clearly in the last market recap it was nearing 50%, and I mentioned that it may hit 50% next week, and that is this week. It did hit 50% intraday, and see where it came down from there to only, relatively speaking, of course, from 50 it came down to 18%. What does it mean? It means a large percentage of S&P 1500 stocks that were well below lower boundary, lower Bollinger Band, they recovered somewhat. It improved a bit, but overall breadth picture is not bullish yet. And still 85% of stocks are below the mid Bollinger Band, that is very bearish. So breadth is also bearish in terms of sector industry stock advanced decline breadth, and in terms of Bollinger Band move, that is technical price move, is also bearish. What about technical breadth from Q Finder? Let's look at the weekly picture first. Technical breadth, very unique signal, very bearish across all signals, strength signals, continuation signals. Reversals are more on the bullish side in terms of percentage, but absolute number of reversals are not enough, and there are not enough, not nearly enough bullish headwinds in the weekly interval. I like to see the weekly percentage of bullish headwinds to go above 1%. That will give me a signal to buy from technical breadth point of view. That may happen next week, who knows, but it has not happened yet. Weekly breadth is still bearish, technical breadth, and daily technical breadth is also bearish across all the categories. Not a time to short, it's already too weak. that is about the market. I looked at it from different angles. Not a time to short is my conclusion. We could buy some stocks on Thursday, as I did. At least I did. Adobe was one. And I prefer to look for buy signals than short signals if the market goes up next week. I'll not like to look at more stocks as I mentioned today. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session, which I will most likely have next weekend. I'll announce the date and time on Twitter. Have a great weekend, and as these live examples show, we not only can trade profitably, we can trade with confidence by anticipating a move and taking the trade if and when that anticipation comes true. With that, I end today's session. Thanks once again. Have a great weekend. Bye.